Hi, welcome to the Market Alert for Monday, the 8th of November 2021. So it's all about the Fed and the non-farm payrolls on Friday. So Fed taper sparks best week for bonds, stock and gold in over 6 months. Extreme greed is the subhead there. October payrolls soar to 531k, smashing expectations as prior months revised sharply higher. Finally, strong jobs report, if not too strong to prompt the Fed to accelerate its tapering anytime soon. Again, we still don't have a date for this, even though they've said mid-month. Equity melt up, as we can see there, accelerates post-payrolls. Bond yields plunge. The market is pricing in policy error once more. Yeah, they should have done this a long time ago. And again, forward misguidance from central bank is a volatility gift. The Bank of England meeting was just a game changer for sterling assets, coupled with the RBA's decision. It weakened faith in central bank communications, elevated the importance of data, and could lead to higher volatility. The sooner the better is what I say. US credit card debt soars back to 1 trillion as pandemic excess savings run out. Things are back to normal for the US consumer. And finally, actually, we've got one more after this. Commodities will never return to 2020 lows, Lawrence Leopard. 40 years of deflation is over given what we see. Couldn't agree more. It is not transitory. And then finally, this one was lobbed out on Friday night. House finally passes bipartisan infrastructure bill. This whole day was a cluster bleep, right? Yeah, absolutely. I was quite concerned about this actually because I managed to go short on Friday afternoon and held the position over the weekend, which you'll see there. I'm at break even, but when I saw this on Friday, I thought, blimey, I'm going to wake up to find the market's gapped higher. But fortunately, I should say, it didn't. So good news there. So. Yeah, let's have a look at the markets. Oh, no, actually, let's have a look at the news first for today. We've got FOMC again today. There's a lot, and Bailey, and the market's closed when we get the other ones later on in the evening. But at 2 p.m., half an hour before the market opens, FOMC, Clarida speaks. Then we've got Powell at 3:30, so an hour into trading could make the market quiet while they wait for him as well. So just keep that in mind. Quite a lot out this week, as you can see there, but we'll look at it on a day-by-day basis. Also got the implied volatility somewhere, so let me just drag this in. And there you can see that we were up on Friday to 1322. Up from 1263. So even though the market put in a blinding day on the upside, the market's getting a bit concerned about what it's seeing. Well, certainly the option sellers are. So let's have a look at Friday. You can see this is the daily chart, and we've got a massive up day there for the Dow. Didn't hold on the highs, but overnight prices are showing some sort of strength, holding at the close of Friday there. So there's your movement on Friday. You can see it moving sharply to the upside, and then the market came back. And at the moment, we're just stuck in this sideways range, sitting on the DP. And as I just said, the close of Friday, very quiet at the moment for the Dow there, but certainly a lot more happening in the DAX. Let's have a look at this one. So we can see on Friday as well, new all-time high for the DAX at 16,089. Currently a bit of weakness overnight. I don't know what happened to ETX overnight as well. They had a bad tick in their data, so I just spent half an hour trying to remove it out of the charts. But at the moment, just sticking with the daily, we're still above the 5-bar moving average. It's still sort of parabolic, and like I said, I'll be keeping an eye on the trade that I've got on at the moment on the short side just to see if it holds. But if not, so at break even, it doesn't really matter. It just had a nice setup to indicate that there was some weakness coming into the market. I mean, all the news was out of the way after the Fed spoke on Wednesday with its tapering and then the non-farm payrolls. I worked on the basis of the price action and then also adding the fundamentals on. But what else was there to be released? Well, obviously there was this, but that came out after the market closed anyway. So yeah, I mean, there's always something, isn't there, that could creep in. In the 30-minute chart, again, you can see how they moved the market higher during Friday's session, again with the non-farm payrolls. But then coming off and with the Dow, we gap lower, which I was surprised by. And at the moment, prices are moving lower in the DAX, below the DP, unlike the Dow, which is currently sitting on top of it and moving to the downside there. So a bit of a mess. I don't know why we've got this gap. The Dow didn't have it, but yeah, we'll just have to see. I think it's some bad data. I don't know whether they're playing with the DAX 30. Actually, I've got the wrong chart in there because that's the DAX. Oh no, sorry, yeah, it's the DAX 40. Sorry, I'm cracking up. I thought it was the DAX 30. Then it's a 30-minute, of course, which I always show. Yeah, so they've got that gapping down, but like I say, something odd with the initial opening part of the session with their data. And then in the 2-minute chart on Friday, the market again finding support at the low. No surprise there. We know all about a bull market and prices finding support at the low to bring it back. We then had a sell, but it didn't come down much. Managed just to get to the scalp before the market traded sideways. Went back above the 200 MA. And then you can see there the market's reaction to the news of the non-farm payroll figures. The market then trading sideways, working its way back down. In fact, what I've done here is change the times, but last week, of course, we were at 13:30. So the market couldn't make its mind up at the start, and there were two other trades there where the market was undecided. But once it broke to the downside, and then we see them buying back here, and it came back, I decided that the market wasn't making any progress, and combined with the fibs and the price action from here down to here, the market coming back to that 78, 89 area. And as it traded back, when we got a close below the 5-bar moving average, went short there. So we got an 89 there, and if I just remove this and this, and if I draw in from here to here as well, you will see the market coming back to another 78 there as well, giving confirmation of what I was seeing. And then the market's moved lower, as we can see there at the moment, continuing to move to the downside. At this time, that doesn't mean to say it's going to remain that way when the futures open. It can soon rally back. But when I look at the daily chart at the moment, this market's been vertical for the last week or so, and it's time to actually have a bit of a breather. But that's going to be dependent on the market. If we just go back to the 2-minute chart and do this, it really depends on the market taking out Friday's low if it is going to achieve this. But we've got the BRN in between as well, which is the 16,000, which is going to be the new psychological level. So this area here for the DAX is going to be crucial for finding support if the market intends to do so. And finally, in the metals arena, I'm surprised but also pleased to see that silver is continuing to move to the upside. We do have some supply selling coming into the market here at the 100-day moving average. I have this in this chart because it's one that is monitored by the metals traders. They use it as obviously an indicator of strength or weakness. Last time we got to the 100-day moving average, the market struggled and then pulled back. So I'm surprised to see this up overnight, but then given what's going on in the market, I'm not surprised. Or behind the scenes with inflation, yields dropping, etc. Friday, great day for gold day. You can see trading up to the 89% retracement overnight, but a good move on Friday with an increase in volume as well. Surprised they're allowing this to happen, but the 89 there represents a bit of a resistance level for this market at the moment. Meanwhile, in the dollar, this moved higher on the news initially. If I just show you the 30-minute, you can see that it rallied for 30 minutes and then sold off. There was some profit taken there, and silver then coming back in. Again, we need to take out Friday's low in the dollar in order to move lower. And just a quick look to finish off with the 30 minutes of silver inside Friday's action with the non-farm payrolls. You can see there the market moving sharply lower, then being brought back. And then there was some selling here but the market held at the DP, and then as soon as we closed back above the 5-bar moving average, we moved higher. And overnight also we've seen prices moving. However, with the moment we've got a couple of 30 minutes of selling in the silver market, and now you can see it in the 5 minute there. Okay, that's it for this one. Just a quick roundup of where we are and what to expect during today. So let's see what happens. As ever, thanks for watching. See you in the next one.